Alright guys, how you guys doing? So welcome to In the News, and today we're going to be talking about why Pancakeswap's current unpriced crash is actually great for investors and traders as well. So our summary today is number one, Cake is fundamentally and technically undervalued, and this partially due to recent news. Number two, Binance Smart Chain is a rapidly growing blockchain, and Cake has near monopoly over the Binance Smart Chain DEX ecosystem. And number three, DEXs will have growing popularity as centralized exchanges and organizations falter. So, number one, Pancakeswap is undervalued. In a similar manner to stocks, a great asset valuation metric in cryptocurrency is to compare the book value of a particular token to its total market capitalization. TVL, or total value locked, refers to the monetary sum of all collateral locked and staked in a particular DeFi project. We will consider this to be the book value of the DEX. So it's not technically the same, but close enough. As it stands, Cake has a TVL of 2.02 billion with only a market capitalization of 314 million, and this is a differential of 6.44x. And we'll get to these pictures in a second. As a comparison, the DEX's number one competitor Uniswap has a TVL of 4.09 billion with a market capitalization of $3.71 billion. And this is only a differential of 1.1x. So we have 1.1 here versus 6.44. So why such a disparity between TVL and market cap for Cake? In my opinion, this has to do with the respective increases of circulating token supply based on separate tokenomic goals. And so the point of this is that you have to remember that the valuation. So we have here 2.02 billion for Pancakeswap, and our market cap is 313.77 million for the Cake token. Meanwhile, for the Uniswap TVL is 4.09, and the market cap is 3.71 for the Uniswap token. So we have to remember is that the market cap for tokens doesn't mean what the underlying foundation's valuation is or the underlying protocol's valuation is. The market cap of a cryptocurrency token is simply just the overall measure of the economy's value. And as I am going to mention in a little second, Uniswap, and this is why it's very important to read white papers, Uniswap is just a governance token. It's not meant for anything else. Meanwhile, Pancakeswap, as I mentioned in a little bit, is used far more as a utility token, far more for rewards and whatnot. So let's get in here. So when we're comparing unis or examining Uniswap's circulating supply, currently until the end of its 4-year vesting schedule in September 2024, the only tokens that have the potential of entering the open market are the Uni tokens that are unlocked for the treasury and project investors. Uni currently has a cap supply of $1 billion or 1 billion tokens. On the flip side, Cake's circulating supply used to inflate by 37% annually before this most recent change in tokenomics. This made Cake an inflationary capped cryptocurrency. So what's important to remember here, or to note here, is that Uniswap, when we talk about a supply and demand of a token, that determines the price. If there's more supply than demand, price will go down. If there's more demand than supply, price will go up. The only additional supply that's entering the market potentially is the ones that are unlocking for the treasury and project investors. Meanwhile, Pancakeswap is 37% annually was mostly given out towards stakers and whatnot for payments. And so because it's given out for payments, similar to T-Fuel and Theta, if you know about that project, that will result in a overall selling pressure on larger time frames on the chart. So and also before this recent change in tokenomics, with the current news, and when we checked their light paper, it was around May 2022 when they first proposed this new change of tokenomics. Cake is an inflationary token, which means there will be more supply being created than perpetually more supply entering the economy, and also it was uncapped. But currently, it has a cap of 750 million, but it has a circulating supply of about 201 million. So I think its max right now is about 385. So it still has a little room to hit its cap supply. So here's a snapshot from Cointelegraph, and you see here that the current weekly inflation rate for Cake is 3.78 which is significantly higher than Uni's 2% yearly inflation rate. So you see 3.78 weekly, 2% yearly. Even with the various deflationary measures implemented by cake developers, the net emission is approximately 1 million cake per week, which translates to 37% real inflation annually. So that means, all else being equal, for a price to maintain itself, real demand for cake token has to increase by a minimum of 37%, or not a minimum, but by 37% for prices to remain stable. All else being equal, price will go downwards. And when you check Pancakeswap on the charts, it kind of reflects that. Cake was used partially as a rewards token, and I'll get to that afterwards actually. Its predominant use case, from my understanding, was to reward liquidity providers for both larger currency pairs and also some platform-approved currency pairs in their liquidity farms and share pool sections on the platform. So while momentary user sentiment is low as income has been slashed for stakers and liquidity providers, newcomers to subsequent bull runs will have zero personal engagement or awareness of this and will seek to compound their gains still through favorable APR rates on the platform. And so here are some snapshots where we have their liquidity section. And you have to, I try my best to understand the exact difference between all of these. They're very similar, but it's essentially just other avenues for people to compound their gains, essentially. So it's, if you believe cake is going to go up back up to all-time highs at $44, you might as well stake it and earn more cake, so that when you do the math on that, once price actually does reach all-time highs, you'll earn way more than if you were just to leave your cake in, let's say, a ledger or a MetaMask or something like that. And so they have a few different options for different financial products and services, I guess. So, and I also do want to say, so the good thing about Pancakeswap is this, where irregardless if payment is getting, if payment is being reduced in terms of lessening the 37% inflation rate, in the next bull run, let's say if cake is at $15 and we see it going up towards 44 again, which is its all-time high, realistically speaking, I don't know if newcomers in 2024, 25 are going to necessarily care if price, or if earning potential has gone down in the past, if it still has high APRs like this when you compare it, especially towards traditional returns in like the stock market, for example, or in a savings account, a fiat savings account, for example. So, number 2, Binance Smart Chain growth is astounding. Another key point to consider is that the Binance Smart Chain is, in my opinion, the top underdog of crypto, and that's, in my opinion, that's anything that's not Bitcoin or Ethereum in terms of the underdogs. Whether you check BNB crypto pairs or simply compare raw metrics between blockchains, Binance Smart Chain washes competitors such as Polygon, Optimism, Tron, Avalanche, etc., and it's honestly not too much of a debate. Being the top DEX protocol on the top underdog crypto platform is an immensely great position to be in for both both for real growth and price growth that the market has yet to factor into cake's price. So here's a chart comparing Binance or BNB to Ethereum and also to Bitcoin on the weekly charts. So Binance came out in 2018, I believe. What year did BNB token debut? 2017. All right. So it came out in 2017. So this is how much price has appreciated since then. And if you were to look this up on TradingView, you'll see that this is like, how many factors is this? 10. Yeah, at least 100-fold against both of them. Meanwhile, and it took me a little bit to research this, but realistically speaking, the top competitors for BNB or Binance Smart Chain is really Polygon, Optimism, Avalanche, and Tron. Some say Arbitrum. I'm not sure if I just said that or not. So, well, yeah, Matic, Optimism, Arbitrum, Avalanche, and Tron. Yes, those are the main ones. So we look at here back on DeFi Llama. This this chart was looking at the TVL of all three, so or all four. So Binance Smart Chain, Tron, Polygon, Avalanche, and you'll see here that Binance Smart Chain, which is blue, is on top of all of them, besides Tron at the very end, where Tron is actually beating Binance Smart Chain in terms of total value locked in a DeFi protocol. But when you look at here, you'll see that Tron has 67% more users than Binance Smart Chain as of May 23rd, 2023, so about a week ago. But outside of that, Binance Smart Chain is at the very top. So when you compare though, Tron's price, so the token for Tron is TRX and for Binance Smart Chain is BNB, you'll see that even though it has the highest TVL right now, because Binance or BNB is used also within the Binance exchange and not just for DeFi, and also because Binance Smart Chain also has the largest amount of Dapps, and we'll get into that in a second. That even beating Binance Smart Chain, the prices of the token doesn't reflect that at all. And so this is TRX compared to BNB on the weekly, and you see it's gone down. Number 3, DEXs will only grow with time. Because decentralized exchanges are the innovation to centralized exchanges, you can assume that the weight of a DEX user is higher than that of a centralized exchange user. In light of FTX, Celsius, rug pools, the increasing government scrutiny of centralized exchanges such as Binance, and the increasing amount of pressure for KYC and anti-money laundering measures to be implemented by such platforms, there's not too much incentive for anybody who moves over to DEXs to ever voluntarily switch back. And this is also the same case overall as with crypto. Even though there's going to be a lot of people who get into crypto just for the speculation and then eventually cash back out into fiat, people who are crypto enthusiasts or maximalists such as myself, there's never a point in time where I'll ever be predominantly fiat again. And so when we're comparing this to DEXs in a similar manner, is that once people are using DEXs and decentralized protocols, perpetual trading protocols, farming protocols, etc. for DeFi, there isn't really an incentive to go back to centralized exchanges because of all of the issues that comes along with centralized authority of these type of platforms. So for Pancakeswap specifically, it has an immensely underrated position as it is the top DEX for all of the indie tokens that premiere on Binance Smart Chain as well, and for us that's Watch to Earn and also Faucet. And my reasoning behind this is because it costs no more than $5 to launch a token on Binance Smart Chain. Compare that to Ethereum and whatnot. BEP20, which is the token standard for Binance Smart Chain, BEP20 tokens are MetaMask compatible, which means that the most popular wallet is supported. So it's not like people have to use like a Cardano wallet or something like that that's completely foreign. Even with Wax, for example, you have to use like the Anchor wallet, which is a friction for attracting new people. Binance Smart Chain and BNB has the most Dapps infrastructure compared to any other blockchain, and then BNB has more room for price growth than Ethereum via market cap. So, and we'll get to these in a second. Assuming this trend continues, Pancakeswap will be the top DEX of the hottest blockchain in the coming bull run, which means Cake's price ought to at least match current all-time highs of $44.18. And when we look at CoinMarketCap, currently there's roughly about 201 million circulating Cake. And so when you, if you were to consider this times $44.18, you get a market cap of $8.8 billion for the protocol. $8.8 billion Pancakeswap will currently rank it above current day Solana and below current day Dogecoin. And that's, I think, 7 or 8. I forgot the exact position on CoinMarketCap. But because crypto exchanges are absolutely key infrastructure within the whole decentralized ecosystem, this ought to raise Cake's price safely, as DEX demand is nearly constant and would only wane if a superior method of cryptocurrency exchange comes about, which at absolute earliest would occur in the medium to long term, which is at bare minimum, 2 years from now, up to maybe 5 years from now, a competitor to decentralized exchanges. So for the short to medium term, realistically speaking, I think DEXs are going to take the number one position eventually over centralized exchanges such as Coinbase, such as Kraken, Binance, whichever ones are still around, basically. And yes, I also wanted to consider to mention this is where you have to think of decentralized exchanges as infrastructure in the same way how you have to think of this as like a highway, for example, for like a road. People will always want to exchange cryptocurrencies for one another. That's just how it's going to be for the foreseeable future, probably forever. And same way with fiat. Same thing with fiat exchanges at the airport, for example. That would be a great investment to make, in terms of this is not going to go anywhere, so you might as well invest into the token now. And that's kind of the thinking that I have for Pancakeswap, where it's like DEXs will not go around or will not leave cryptocurrency. So investing in a token of the highway within at least the Binance Smart Chain ecosystem is a sensible investment in my opinion. So this is a snapshot of an article written on LinkedIn. And this is the top 4 blockchains by number of Dapps as of May 15, 2023. And you'll see that Binance Smart Chain has 4,400, or 47 basically, 4,747. Ethereum has 4,091, and Polygon, which is pretty much diet Ethereum, has 1622s, and Tron is coming up next. So the whole point being that because Binance Smart Chain, and not even just Binance Smart Chain, very specifically the smart contract capabilities within Binance Smart Chain. Hold up. When did Binance Smart Chain get smart contract capabilities? 2020. All right then. Yes, that actually makes sense. Yeah, 2020. So the fact that in only 2-3 years, Binance Smart Chain has been able to catch up to Ethereum, realistically speaking, you'd have to assume that growth rate is going to, at least the differential between the two growth rates ought to remain roughly the same at bare minimum, really. And so these two snapshots are from the same article here. BNB, the world's top blockchain by number of Dapps. And then we look down here, this was a snapshot from Dapp Radar. The top 10 protocols by daily unique active users in Q4 of last year, 2022. You see that Binance Smart Chain is up here, while its next competitor really is Polygon, or for next competitor for what we've just mentioned in this presentation is Polygon. You see Optimism here. It's you can't just look at market cap. You can't just look at TVL. You have to look at how active people are using it, and that's for me that's a far higher how you say, that's a far better metric to use, because for example, people use YouTube, people use Instagram, people use TikTok far more than they use for example maybe LinkedIn. So the amount of advertising dollars, for example, on the associated platforms should be higher than in LinkedIn. There's quite a few different implications that you can make from that. And so if Binance Smart Chain has the highest amount of users currently, and assuming that continues on the during the next bull runs, which means more and more capital than what we've seen before, you should assume that the top DEX of the top blockchain should experience some appreciation growth in terms of price, essentially. And so this is what I was mentioning before. Here, BNB has more room for price growth than Ethereum. So when you look at CoinMarketCap, you'll see that Ethereum roughly has, what is that, a little over 4x times of the market cap than BNB. So the whole point is that, in my opinion at least, in the same way how we look at the 2017 NFT bull run on Ethereum, and then when you check the prices as well of Ethereum of how it went so high, my opinion, and I kind of still am trying to test this out or think about it some more, but my opinion is that the cryptocurrency blockchain slash platform slash token that has all the infrastructure around it, such as Binance Smart Chain, and also has enough room to grow, such as with the BNB token. My opinion is that, all else being equal, how do I say this? All else being equal, people would want to join the side of the hottest token first. So that's the reason why. Oh, and I wish it was a little bit longer, this snapshot. But remember when Solana came out last year, or 2021, where everything was Solana, everything was Solana. But before then, obviously, Solana wasn't a name. And then nowadays, you don't really hear Solana too much due to the outages and whatnot. It's not as hot anymore. So in the same way how Solana was able to grow a whole bunch of and let's look at the price, actually, because I remember this in my head, but you guys probably don't know. But let's look at the Solana price, right? Solana did this huge run from $1 all the way up to $1.80. And so that's kind of what my point is, that in my opinion, the amount of developers that will go on Solana, or the amount of users who want to use Solana, is highly correlated to the price potential slash the price movement of the underlying cryptocurrency. Because it's like, you want to join the blockchain where you're interacting with the token that's going to appreciate by literally what, 100-fold, 200-fold, you might as well. So that's kind of the point where when BNB ETH, or ETH, there you go. When you have BNB against Ethereum, an entire, 29, 30,000% since, what is this, 2017, realistically speaking, if we're already seeing that Binance Smart Chain has eclipsed it in terms of Dapps, you should expect that this differential in market capitalization should either equal Ethereum, surpass Ethereum, or Ethereum should go downwards in valuation, and you'll see the Ethereum market cap disperse. It'll be dispersed probably between Polygon, BNB, Arbitrum, Optimism. But realistically speaking, this shouldn't be the case when we look at the underlying valuation. So because BNB is undervalued, correspondingly, Pancakeswap is undervalued, and also we see that Binance is itself fundamentally undervalued, not just technically, and then also Pancakeswap is fundamentally undervalued when we look at, for example, when we looked at the TVL earlier in the presentation. So when you multiplying those individual factors, we should see a large increase in Pancakeswap's price and market cap. So the last thing I want to do is look at Uniswap market cap. Well, actually, let's. I don't want to look at its market cap. Actually, I want to look at its position. All right, so its position right now is number 22, and so let's look at where that puts it. I wish this would load a tad bit quicker. Yeah, it's like right there. Let's reload this again. Alright. So it's above OKB. I'm not sure what OKB is, but above Monero, underneath Cosmos, okay, underneath Wrap Bitcoin. So it's like, it's questionable whether or not the position. So Pancakeswap right now, I believe, is at like around 100 or 98. Yeah, 98. So you see it's on the complete further side of that. So ending this video now, I do believe that Pancakeswap its all-time lows are around right here. It's going to be, I think when I looked at the chart, it looks like it's going to be as low as $1. So I'm still factoring in that Pancakeswap might still decrease by some change, but realistically speaking, if a $44 Pancakeswap meets an 8.8 valuation, $8.8 billion valuation for Pancakeswap, realistically speaking, a $5, $10 Pancakeswap should be realistic. So if you want to 8x, 10x your valuation, depending on what price you get in my opinion, Pancakeswap is a great investment for the long term, and then also for the shorter term or medium term if you're just looking for technicals, you're not really caring about the fundamentals. So thank you guys for watching this in the news video, and until next time, catch you later.